Hey guys, hey, welcome ladies and gentlemen to another session of Short the Metrics. We are here to provide with any insights regarding any assets you guys would like to trade, macroeconomics and fun stuff. So let's get it kicking. This will be a short one and a sweet one for you all to see how do I approach the charts. In this session, we will be talking about the Bitcoin's chart and how we can apply some of the strategies we use here to your charts and, just keep on winning. So let's get with it. If so, as you can see, guys, on the 1 hour time frame, Bitcoin is stuck in a boring range without any breakthrough to either direction, meaning we have a lot more stuff to watch out for before we enter into positions. But keep this in mind, as you can see. Let me turn on the session. So, as you can see, yesterday's Asia um, kind of trapped everyone long before they went down. So as you can see, New York has built their longs later, together with London, of course, and you can see that the Asian session yesterday has kept the range, and then London came and broke the range down. You can see Asia has kept the range as well. And once we started London today, Bitcoin has started shooting up. If you remember our previous analysis, which was this one. Our previous analysis have spoken about taking 31 500 and 31 700 before continuing lower or higher, and that um, we got to that conclusion using Hyblock. Okay, so let me jump over to Hyblock real quick. This is the 12 hours time frame. Let's update it and see what we have in store. So as you can see, there are a lot of liquidation points as we are in the lowest time frame. So a lot of orders are accumulating in this zone, and there's a lot of liquidity for the market makers to grab. But as you can see, they already started their move up. Their next point of interest will be 30,925 with $250 million of liquidation revenue. So there's the incentive for the market maker to take it all before considering any more biased move to either direction. And of course, as we can see, there's almost $300 million worth of liquidation points down at 30,275. Let's mark that off. That's right here where you can see the move. Most of the long have opened here. So in case market maker would like to profit on those shorts he opened here, he will need to come back to it. But of course, as you can see, the move up is pretty convincing with its volume. As you can see, that's on the hour time frame. Let's go higher. As you can see, volume has started to rise, but on the bigger picture, volume is dropping significantly. So, is this move fake? We don't know. All we know right now, and all you have to take under consideration, is that there are a lot of liquidation points up here at these two lines. Let me erase this range. Over here, at these two lines, there are a lot of liquidation points, as you guys can see. Let's go over to the 7 days time frame to see it to see a bigger picture and a clearer direction. And as you can see right now, a lot of liquidation points in these sort of places, accumulating starting from 3 billion to 4 billion to 5 billion each, equal to like $10 billion of liquidation points the market maker have to take. So they can do it today, okay? Starting seeing this move, I'm pretty much convinced that they will rip back up to take these liquidation points before they do anything else. Of course, granted, once this move has started, we expect a little bit of a retrace just to trap more retailers, maybe a stop hand down before we continue back up to take these liquidation points. Of course, if the market maker wants to make people come to the charts, what he has to do, he has to react to the news that we have today. So let's see what we have today. We have the ADP non-farm employment change, which is a very serious thing in the US, showing that the data um, is actually telling us that the Fed is expecting less non-employment, meaning stronger dollar. So weaker dollar, of course. So this is kind of a preparation till we have the non-farm employment change tomorrow in Friday. So this today, a lot of news coming up can affect the market. So I would be very cautious opening position right now unless you are first experienced with trading news. I don't recommend it anytime. Don't trade the news. Um, but of course, you can expect a little bit of a retrace and maybe some resistance here at last week's high. We can make it. Um, so guys, be aware, know that you have a lot of liquidation points to grab. And of course, as you know, we also have this line here, liquidation point. Once they rip through it, I guess a lot of stops will be hit and the price will continue further down. So be aware that there are two options for this to take, but as it is now, we can go grab that liquidity before we rip back lower. So only time will tell. That's over. Let's head over to Ethereum. Perfect. So Ethereum is also rising. You can see that they haven't broken beyond that wick right here. Recover the green vector candles that were here, meaning the momentum is present. But as of now, we're seeing a bit of of resistance at psychological high, which is the highest point of the Asian session in Monday, where the market maker builds his positions from. So we'll need to be careful here. As you can see, Ethereum has broken its daily open, retraced to it, didn't break it, and then went higher. So logic says that we would go back up once we retrace a little bit to these places. And why these places? As you can see, we have the vector candle here. So maybe we'll get to it, maybe we won't, but that's the flavor. That's how we do things. So we'll expect Ethereum to hit 1960 today, maybe, if everything goes well, but don't get all bull up because things can go down as fast as they go down, as they go up. So be careful, watch very carefully for this. Of course, Ethereum will need to break this range 1892 for us to consider going short. And of course, this week right here is one of the points of interest that the market maker could come back to. Let's go up to the 1 hour time frame. As you can see, there's some head and shoulder pattern right here, but we are not very ordinary retail. We are not ordinary retails. We see the pattern. We know that retailers are going short right now. We know it, right? Because head and shoulders in every traditional book, head and shoulders is a reversal pattern. So people have gone short right now, okay? So this pattern could be valid, of course, but we understand something. We understand the psychology of the market. We know where the market maker leave his footsteps. So we will be waiting in this zone. If we see that we are declining and not being able to push through, then of course shorts could be opening and repeat back down minimum to this vector candle. And of course, if we go even deeper, Ethereum can go all the way to the 700 and we can even open the high block for Ethereum. Let's do it, starting with the 12-hour charts, and let's see what we have in store. So you see a lot of noise in the 12 hours chart, a lot of liquidation points all over. You can see that they didn't grab this liquidity. Maybe they go down a little just to go up. Let's go to the higher time frames to get a little more sound pro projection. So as you can see in the 1990s, there is a nearly $2.5 billion for the market makers to grab, and they started the move up. Only reasonably that they will go there before they continue to either direction. So we will be watching this and we'll of course let you know regarding what we have. So guys, have a nice trading day. Be careful and wait till the news comes out so you can get the actual move and know the direction. Have a good one, guys.